Hello everyone, this is Sunko, the Korean bro. Today is 2022, March 31st. How are you guys doing? Everybody's fine. Okay, let's go back to articles one by one. Okay. Let's first look at Yahoo Finance. Okay, Yahoo Finance. What do we have tonight? It looks like we have a negative trend tonight, not positive trend, negative trend. Uh, Last night was a big upper move, but tonight is a big downward move. Okay. The market beats. And what I'm going to open is Excel file that I recently created, and because from now on I'm going to organize every data that I get and have that written in this Excel file so that every information will be organized. So next time I look at it, I'll be able to look at it easily, right? I won't have to spend much time, going through details that I've written so far, right? Okay, wait, hold on for a second. Let me adjust the camera setting a bit. There you go. Okay. Okay. Last time we looked at the information of Cloudflare because it's one of the companies that I invested into. But before going into details of each companies that I invested in, I'm just gonna look at just articles randomly and then okay. Why the tanking Japanese yen should concern investors? Weekly jobless claims rise to 22,000 above last week's 52-year low. Private payrolls rose by 455,000 in March. ADP, two oversold stocks that are poised for a rebound. Kramer's Mad Money recap. Micron, Devon Energy, Tesla stock market falls as Russia sours on peace talks. Oil price climb, yields fall. While President Biden releasing oil from reserves may mean for gas stocks. Here's how Goldman Sachs views PayPal block. Stock market news live update. Stock futures muted after indexes snap 4-day winning streak. European stocks higher. New Ukraine peace talks likely. Stock picks Apple, Nvidia reveal 7 telltale traits of winning stocks. U.S. stock futures edge. Europe is facing supply disruptions as Russia's gas for rubles deadline looms. Okay, let me hold on for a second. I've got to send some messages to my girlfriend first, and then I'll focus on this YouTube live. Okay. Okay. Fintech stocks fall amid report of Apple's financial service plans. Fintech stocks falls. Mystifying U.S. stock rally defies economic unease. Stock surge is a bear market trap with curve inverted. Stock surge. Goldman Sachs bullish on these two stocks for 80% upside. IBD 50 growth stocks to watch. Rex for industrial reality sets up for upswing. Facebook advertiser can pursue class action over ad rates. Will Nvidia stock retest the highs, the lows, or both? Microsoft left out of big rally as investor balk at high price tag. When to sell growth stocks? Why this rule work like magic for the small cap leader? Elon Musk recommends investing in physical things. Here are 3 physical assets that perform well during high inflation. Kathy Wood watch. ARK buys crypto stock, buys and sells EVs. Good time to sell Facebook. Wall Street must come clean on fossil fuel plants. Texas says. Goldman's Oppenheimer sees US stock rally running out of steam. UiPath sinks as revenue outlook below forecast. Why is Bitcoin's price going up again? Robinhood's longer trading hours don't make the stock any more attractive. What made Warren Buffett rich is making us all poor. What stock market investors need to know about the bond market's recession signal? 3 industry leading Dow stocks to buy now. 4 downtrodden EV stock, buy the deep. OPEC sticks to modest boost in oil despite war jitters. Biden planning to tap oil reserve to control gas prices. More Americans apply for jobless benefits, layoffs low. Workday Stock is working its recovery. Three beaten down stocks rising from the ashes. The bottom isn't for PayPal. Okay. 2 oversold stocks are poised for a rebound. Celestic SA, the first beaten down stock we'll look at. Celestics is a Paris-based biopharmaceutical company working in the immunotherapy field, seeking new treatments for cancer. Celestics focuses its efforts on the development of chimeric antigen receptor T cells, a mode of attack on cancer that aims to use the patient's own immune system to fight tumor growth. Laird Superfood. Now let's turn to the dietary supplement sector with Laird Superfoods, founded by surfing champ Laird Hamilton in 2015. This company develops, produces, markets, and distributes a range of nutrient-dense plant-based food additives and snacks designed to give consumers a natural boost of energy through the day. The company's best-known products are its line of non-dairy coffee creamers. Their target audience are consumers looking for a combination of energy and nutrition to add to their normal diet. PayPal and Block. Goldman Sachs analyst Michael Angie has initiated coverage on fintech firms PayPal Holdings and Block with buy ratings. Initiated coverage of PayPal with $144 price target, 19% upside. Block with $173 price target, 20% upside. And blah, blah, blah. The 11% surge in US stocks in the past 2 weeks that has the hallmarks of a bear market rally. They might give way to deeper losses. That's the conclusion of analysts at Bank of America, who say warning signs are flashing for a market that has climbed despite clearly weaker fundamentals, including a Federal Reserve bent on raising rates sharply this year to battle persistent inflation. So the strategists caution that the sell-off that took the S&P 500 12% from its January record is not over, and sharp rallies are typical of volatility in bear markets, with some of the biggest on record occurring in the throes of the dot-com meltdown and the global financial crisis. A closely watched the Treasury market metric flashed a recession warning Tuesday, adding towards a restrictive Fed will damage the economy. The worsening macro backdrop and market-unfriendly Fed make sustained U.S. equity gains unlikely. Strategies including Gonzalo assets and Reedy pursued the road. The Fed isn't likely to come to the market's rescue at any point. And in fact, the central bank is welcoming of tighter financial conditions to aid its battle against inflation. Goldman Sachs bullish on these two stocks for 80% upside. Xometry. The first Goldman peak will look at is Xometry. The company is a leader in on-demand parts supply, using AI to enable a network of suppliers. To meet the demands of the manufacturing industry. Put more plainly, Xometry focuses on lean supply, creating a network of suppliers, and giving manufacturers access to their know-how on demand. Xometry. Okay, and what else do we have? Repair Therapeutics. Next up on Goldman's radar is Repair Therapeutics, the clinical stage biopharmaceutical maker in the precision oncology niche. IBD 50 growth stocks watch rocks for industrial reality sets up for upswing. Kathy Wood watch Art buys crypto stock, buys and sells EVs. Bought and sold shares of electric vehicle makers and snapped up shares of two biotech companies. Traded again on Tuesday, buying a major cryptocurrency stock and selling shares of a big electric vehicle maker. She also continued her purchases of a biotech, bought into a Chinese electric vehicle maker, and acquired shares of a maker of robotic systems. All valuations are as of Tuesday's close. Coinbase, the largest U.S. cryptocurrency exchange for the second day in a row. In January, or said Bitcoin could reach $1 billion by 2030. It recently traded at $47,288. Coinbase. Sold EV leader Tesla for a second time in a week. Wood has said that her sales of stock are designed to take profits and that she still believes in the Austin company. Tesla remains the biggest holding in Wood's flagship fund, ARK Innovation ETF. has rallied 23% with the broad average in last 2 weeks ending a vicious high volume decline. Longer trading hours don't make the stock any more attractive. The trading platform and app Robinhood markets The trading platform at Robinhood Markets attracted attention and heavy volume Tuesday when the company announced it would extend its trading hours and moves closer to offering 24-hour trading in stocks and other instruments. But has this news made a meaningful difference to Hood's charts and indicators? Let's check. In our last review of Hood back on January 31st, we wrote that purchase and sales by Kathy would attract a lot of attention. Prices could rebound to the $22 area and probably higher. Aggressive traders could long Hood, risking to $9. This rally may only last a month, so don't get too attached. With hindsight, we can see that prices did not travel very far, and the bounce lasted less than a month. Let's look at the charts again. What made Warren Buffett rich is making us all plural. Okay. Sky high gas prices are surfacing memories of a bygone era, the 1970s, defined by bell bottoms, disco music, and gas lines. Modern motorists might pine for the prospect of 50 cents a gallon unleaded gas at the decade average, but don't compare that to the $4 plus gallon we're selling out. For true apples to apples price comparison, it's worth reviewing a concept that not only made Warren Buffett fabulously rich, but also makes us all like bit poor. My life has been a product of a compound interest, Warren Buffett once famously said. What worked investment wise for the Oracle of Omaha over the 3/4 of a century also works in reverse. With rising prices, my life has been a product of compound interest. Took over the flagging textile company in 1965, Buffett's Berkshire Hathaway has been compounding returns at an average rate of about 20% per year, legendary over this time frame. Assuming perfectly average returns, his initial $15 per share investment would have become $18 after 20% return that first year. Now do that for 12 years, and by 1976, the shares are cracking the $100 threshold. Cool $1,000 at another zero in 2001 and then again in 2014. Every dozen or so years, Berkshire increases of value, whooping 900%. Live to nearly a century and adds it up, always slowly. Of course, returns like this are never perfectly even. Most of us don't actually live to be 100. And weren't we talking about gas prices anyway? Okay, let's go to market beats. Three industry leading those stocks to buy. Rock solid businesses. Caterpillar. This company is the world's leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel electric locomotives, and could be a great option for investors to consider at this time. Caterpillar is set to benefit from a huge uptick in infrastructure spending both in the United States and abroad. Walmart and United Health Group. Uh, Not really. Mm. Four downtrodden EV stocks to buy today. Why buy EV stocks on a downturn? The stock market theme of 2022 might be corrections and more corrections. Electric vehicle stocks are no stranger to the troubles plaguing the market. The S&P 500 has nosedived about 12% since February after riding out highs at the beginning of the year. Unfortunately, the corrections killed more than 6 months of gains in the stock market. However, as any savvy stock investor knows, now is the time to scoop up some deals. Let's find out whether you should turn to these beaten up EV stocks to add to your portfolio. NIO, headquartered in Shanghai, China, designs, manufactures, and sells electric vehicles in China. The company also manufactures e-powertrain, battery packs, and components. The company puts an emphasis on racing management, technology development, and sales and after-sales management activities. The company also offers battery charging needs and other services. Quarterly, total revenues reached $1,553, and full year total revenue reached $5,670 million. Ford Motor Company, Lucid Group, Xpeng buy EV stocks even though they're down in the markets. Okay, how down are they? Lucid Group, LCID. Ford Motor. We have NEO. Okay. Workday Stock is working into recovery. Human capital management financial workflow solutions provider, Workday. Human capital management and financial workflow solutions provider. Stock has bottomed, with the market indexes as it mounts to recovery off its recent lows under $206. The enterprise cloud provider of its industry-leading HCM applications and CFO suite of financial software tools continue to grow its top and bottom lines. The double-digit capitalizing the migration to the cloud, whereas HCM software is traditionally used on premises. The company is the leader in cloud-based HCM and riding the migration and adoption of enterprise cloud as it pertains to both HCM and ERP. The company is seeing strong growth internationally as sales surpassed the $1 billion mark in fiscal 2022 and bolstering its workforce by 20% last year. Okay, these three beaten down stocks rising from the ashes. Block, okay. Now let's Meta Platforms, Lululemon, Athletica. Has an interesting business model that involves providing payment and point-of-sale solutions to merchants all over the world. That means Block is a company playing a pivotal role in the electronic payment space, which is a trend that investors should definitely consider tapping into over the next decade. Okay, this time we're going to look at Block. Okay. What does Block Company do? What does Block Company do? Has an interesting business model that involves providing payment and point of sale solutions to merchants all over the world. Um, there's also a lot to like about Block's person-to-person payment network called Cash App, which allows people to make quick digital transfers of cash, trade Bitcoin, and even purchase fractional shares of stocks with no commissions. Lot to like about Block's person-to-person payments. Cash App. Additionally, Block has acquired a global buy now pay later platform Afterpay in order to take advantage of cross-selling opportunities and expand its product portfolio. Okay. BNPL is a big trend in the fintech space at this time. BNPL, buy now, pay later. How these platforms allow consumers to make purchases while avoiding interest and service fees. How these platforms allow consumers to make purchases while avoiding interest and service fees, and it's easy to see how Afterpay can fit into Block's existing network. Finally, Block recently reported a quarter four revenue of $4.8 billion, up 29% year over year. Thanks to strong transaction-based subscription Bitcoin revenues, which could have finally marked the bottom for this beaten down name. Okay, now next one we have is Meta Platforms. Meta Platforms. Meta Platforms. Meta Platforms, formerly known as Facebook, is another perfect example of a beaten down stock with a valuation that's gotten too good for buyers to pass up. Okay. Meta Platforms. The social media giant stock is trading at a P/E ratio of 1609. What did we say about P/E ratio? P/E ratio, price to earning ratio of 1609, which is very attractive compared to many of the other major mega cap tech stocks. A reason enough to consider adding shares. Meta Platforms. Then there is the fact that the company's social network have nearly 3 billion monthly active users, which is truly staggering figure that speaks volumes about how big its reach has gotten. 3 billion uh monthly users. Okay. A marketer should continue leveraging Meta's massive user base and data to sell their products and services via social media, which should likely lead to stronger advertising revenue for the company in the long run. Yes, that's right. And keep in mind that the long-term trend of business is allocating more money for online marketing. Advertising spending will benefit Meta in a big way, especially given the company's apps like Instagram and WhatsApp, uh, which are some of the most widely used smartphone applications in the world. Um, there are still some risk to note here, particular regulatory risk and issues related to iOS ad tracking changes. But bargain hunters that are looking for a long-term tech play should still be very excited about this company. Meta Platform. What's the price of Meta Platform? Perfect chance. Meta Platforms. Block. Lululemon Athletic. Lululemon is one of the strongest brands in the retail apparel space, and the recent sell-off could end up being a nice buying opportunity for long-term investors to consider. The company primarily designs clothing and intended for people that live a healthy and active lifestyle. Okay. Next one we have is PayPal. PayPal is the most downgraded stock in quarter first. Downgraded. PayPal Holdings. PayPal Holdings. Next one we have is PayPal Holdings. PayPal. It's the most downgraded stock of the PYPL. Downgrade stock of the quarter 4 reporting in calendar quarter 1 season. The company received 40 downgrades, which is saying something because that's all the analysts rating the stock. The takeaway is that while all 40 of the analysis downgraded the stock, the market bid consensus rating is still a buy if a wick is bought with a price target more than 75% above the recent action. The reason is that PayPal issued a softer than expected guidance and a slight change in its direction that will ultimately drive longer term growth. In our view, what we just witnessed PayPal stock is a reevaluation and a price reset in what is otherwise a very desirable stock. BTIG analyst Mark Palmer said this when he cut the stock rating to neutral from buy and removed his $270 price target. As such, we now view PayPal as a show me story, as company would need to demonstrate that it is still capable of sustaining revenue growth north of 20% on a normalized basis before we would be comfortable assigning it the kind of premium multiple that would indicate significant upside from current trading levels. Institutional activity heats up in wake of guidance. The PayPal guidance shook up the market and sparked a sell-off in shares that have been ravaged by the institutions. Institutions' activities picked up noticeably in the quarter and smacks of rotation, but is overwhelmingly bullish. Total activity in quarter first is worth about $12.9 billion, or about 9% of the market cap, with shares at $115, with bulk of the activity buying. The buying net of selling is worth about 0.7% of the market cap and puts total institutional ownership at 78.4%. If this trend continues, the bottom in PayPal is assured, but price action may move sideways until the analyst reshuffling is over. Looking at PayPal from a industry perspective, online payments and payment gateways are expected to grow at 15% CAGR through 2027. Online payments and payment gateways are expected to grow at 15% in CAGR. This growth is supported by evolving methodology, e-commerce, increasing connectivity, government action, increasing use of mobile, and new technologies that have yet to emerge. In that regard, PayPal is among the top 3 providers of gateway technology and is well positioned to capture organic as well as acquisitional growth over the next 5 years. among the top 3 providers of gateway technology and is well positioned to capture organic as well as acquisition of growth over the next 5 years. PayPal Holdings. PayPal's growth will also be supported by its shift to a more supportive role for its merchants. Okay. The company is aiming to support a small and medium-sized business in all aspects of the e-commerce needs and recently acquired Israel-based Symbio as part of the plan. Okay. Symbio is an e-commerce dropship automation platform that helps business turn inventory into deliveries once sales are made. Okay. The technical outlook: PayPal's COVID bump is over. PayPal is ready to rebound. The charts of PayPal are a little scary considering the size of both the COVID bump and the correction, but one thing is clear: the COVID bump is over. In our opinion, that is good news because now the market can trade on a more realistic view of the market, and the view is expansionary. Now that all the analysts have put in their 2 cents, it looks like a bottom is forming near the $100 level. Okay, this outlook is bolstered by the indicators, which are both showing divergence that are indicative of support at these levels. At worst, we're expecting to see PayPal move sideways at this level until some better news comes out. I bet we are expecting to see PayPal begin moving higher before the middle of the year and possibly reclimb the $200 level by the end of the year. Market B keeps track of Wall Street's top rated and best performing research analysts. And okay, that's enough. Okay. Okay, PayPal Holdings. Now let's go back to Cloudflare. Okay, Cloudflare. I wonder how people talks about Netflix. Okay, let's talk about Netflix first, and then we'll go over to next. Okay, Netflix. Better growth stock DocuSign and Netflix. Why does Netflix cancel so many shows? Winners and losers and will win. $1 trillion tech stock route. Okay, its earnings keeps growing. Stock prices Netflix rises these reasons your Disney subscription could increase soon. Okay, let's go over to Netflix, okay? You're reading a free article opinions that may differ from the Motley Fool's premium investing services. Becomes Motley Fool members today to get instant access to our top analyst recommendations, in-depth research, investment resources, and more. Between the streaming pioneer and the e-signature provider, which is better investment going forward? DocuSign and Netflix. Okay, let's read this in detail, okay? I have both stock, DocuSign, and Netflix, and we'll read one by one, okay? Can't tell which one is better, but what I know is that both of them are good. So it's meaningless to compare one another. But let me clearly hear what this author says. There's gotta be a sign. There's gotta be reasons why he mentions these two companies, right? DocuSign. We have DocuSign, And we got Netflix here. Okay, let's go over one DocuSign. There you go. Okay. Pitting two companies against each other to compare which could be a better investment. Can be an informative endeavor, no matter which ends up being the winner. The side-by-side evaluation can highlight areas where one business is dominant and offer up a clear conclusion about which one to invest in. But that did not necessarily occur when the discussion came to DocuSign and Netflix. In this particular comparison, both companies make a compelling case for investment. Let's take a closer look and see if one of those growth stocks has an edge in the comparison of what are really two winners. Okay, Netflix is the pioneer of streaming content, okay? Undisputed leader in the streaming content industry. Yeah. Mhm. The giant has amassed 222 million subscribers as of December 31st. That was 8.9% higher than the total it had at the same time the prior. Okay. Impressively, Netflix has retained and even added to the outsized subscriber totals. Has retained and even added to the outsized subscribers total it attained during the more acute phases of the pandemic. Retained and even added to the outsized subscriber totals it attained during the more acute phases of the pandemic. The massive size of Netflix gives it a competitive advantage. Okay, Netflix generated $29.7 million in revenue in its fiscal year ended December 31st. And spent $17 billion on content. The more Netflix generates revenue, the more it can spend on content. Okay. Of course, content is the reason consumers subscribe to a streaming service. Consumers will jump ship for competitors without a steady stream of hit titles to keep them coming back, right? Okay. Um, in addition to competitive advantage, the company's scale delivers growing profitability. Netflix has expanded revenue at a compounded annual rate of 24.9% in the last decade. Okay. And as Netflix has grown, so has its operating profit margin. From 2016 to 2021, this margin metric has expanded from 4.3% to 20.9%. Okay. Netflix is not without challenges. The company forecasts its lowest subscriber additions in the current first quarter in at least 5 years. The fear of slowing growth has hammered the stock. Mm. The sell-off means growth investors can buy Netflix at its lowest price to earnings ratio in the last 5 years. The sell-off means growth investors can buy Netflix at its lowest price to earnings ratio in the last 5 years. DocuSign, a digital document signing solution, um, offers a full suite of customer agreement solutions. Its most popular service is the e-signature, where a business can send customers a document to be signed electronically. A digital document signing solution. I've experienced firsthand the convenience this offers before the other party to a regulatory recurring contract that I need to sign switch to DocuSign. I needed to either print, sign, scan, and send the document or visit the office in person to sign. With DocuSign, it's simpler, and I can sign the agreement without printing. The convenience advantage can partly explain why DocuSign has grown revenue from $250 million in 2016 to $2.1 billion in 2021. Hmm. The company is not profitable on the bottom line, but it's delivering solid cash flow from operations, which exploded to $506 million in its fiscal year ended January 31st, from $297 million in the year before. Mm. In addition to growing revenue and cash flow, DocuSign is doing good for the planet. As of January 31st, the company existence have saved 55 billion pieces of paper and earned the gratitude of many signatory for the convenience and earned the gratitude of many signatory. Like Netflix, DocuSign stock has fallen due to lower management guidance related to concerns over slowing growth after the pandemic. DocuSign is now trading at a price to cash flow ratio of 48, which is near the lowest it's been in the last 5 years. But if you had to choose only one, it should be Netflix. The company has proven it can grow on a large scale while simultaneously expanding profit margins. Hmm. Winners and losers and will win $1 trillion tax that route. Could rebound sharply. TJX companies Netflix and Chag could soar once all the dust settles. Owner of off-price store names such as Marshalls and TJ Maxx prides itself on posting some of its best performance when the chips are down. Down 46%. Okay, now it's a good chance, right? Shares of leading streaming service down 46% from their all-time high. Netflix finished 2021 with an impressive 221.8 million paying subscribers globally. But fourth quarter subscriber totals came in short of analyst expectations, which explains why the stock has fallen so much. Okay. Plus, management guided for just 2.5 million net subscriber additions in the first quarter of 2022, which shows growth continuing to decelerate into the new year. Okay. Netflix's lower share price means the value underneath the share is much better. The stock now trades at a price-to-earnings ratio of 33 compared to around 50 at the start of 2022. Investors are getting nearly twice as much value for their investment. Okay, if the stock was overvalued in 2021, it's difficult to make that case now, especially given management's belief that the slowing growth is temporary. We think this may be due to several factors, including the ongoing COVID overhang and macroeconomic hardship in several parts of the world, like Latin America, the company said in the fourth quarter earnings report. One factor that looks very bullish for Netflix future is expanding operating profit margin. Over the last 5 years, it has improved from single digits to over 20%, and management expects to grow operating margin at an average increase of 3 percentage points every few years. A higher margin spell a growing production budget, which will only cement Netflix's competitive position as the must-have subscription service. Higher margin spell a growing production budget. With more than 1 billion people globally subscribing to a streaming service, Netflix has plenty of room to grow over the long term and deliver returns to investors. Chag. The stock is off 68.6% from its high reached in early 2020. Chag thrived at the pandemic onset as millions of students were sent home for remote learning. The company primarily serves college students worldwide with content that helps them with their studies. Chag. Both 75 million pieces of proprietary content explaining concepts covering college curricula. Students can access this treasure trove through a monthly subscription for roughly $15. In addition to access to existing content, subscribers get to ask 20 questions per month. They get answered by subject matter experts. The question and answer that becomes available for all subscribers to benefit from. The highly sought after material has propelled Check to grow revenue from $255 million in 2017 to $776 million in 2021. Further, it delivers this excellent service to students efficiently, and operating income rose from a loss of $23 million to a profit of $78 million in the same time. Are helpful to students whether they're taking online or in-person courses, but more so for online courses. They can partly explain why Czech stock surged when universities sent students home for remote learning, crashed when students were asked to return to campus. The other cause of the crash is that the college enrollment has fallen. The job market is strong and wages are rising, giving college-aged individuals compelling employment options. Nevertheless, the company's long-term prospects are excellent. It has a substantial competitive advantage. With the proprietary content, it is expanding internationally. The stock price crash has a trading at a price to free cash flow of 31. Near the lowest it has sold for in 3 years. For these reasons, Czech stock is a screaming buy in April. Good one, good one, good one. Okay, now let's go over to. I just looked at Netflix and let's go over to Roku. Okay, Roku. Roku stock could resume its downtrend after this recent bounce. Okay. Okay, Roku stock could resume its downtrend after its recent bounce. Roku is up 7% this week, but there might not be reason to believe its troubles are over. Before investors get too excited about a recovery, they should keep in mind that the Roku stock is down 60% over the past 6 months. It's still down more than 45% year to date. That just shows how far Roku stock has fallen. The shares are currently 75% below the 52-week high of $409 they reached last July. Roku has been brought low by a combination of slowing growth, poor financial results, supply chain disruptions, and market volatility. Okay. While the shares have bounced off the bottom of $97.91 they hit on March 14, they still have a long way to go to meaningfully recover and even further to go to test new highs. Short-term problems and broker stock. The company also issued a. It's gonna take a while. Okay, let me sum up at this point. I'm go over this article for the last time tomorrow. Okay, I'll see you guys. Bye bye.